Good morning, everybody. Welcome to Sibos Sydney. We're joined today by Laura Crozier. She's the Global Industry Director of Financial Services at Software AG. Welcome, Laura.
Well, my pleasure, Tim. Thank you for being here.
With more non-banks entering the banking and financial services space, like telcos and big fintechs, how can banks better compete and differentiate their services?
It's a really interesting time in financial services and for banking. I think that we are in an era of convergence where we are starting to see industry lines blur. And definitely banks are no longer the only players within the banking sphere. You know, we've seen Amazon and Google backstepping covertly for a number of years, and now I think they're doing it without even trying to hide the fact that they're stepping backwards. So what do banks have to do? Well, I think banks, first of all, have to be really clear on what business they want to be in and what their strategy is going to be for the future. I think it's really important that they examine the value propositions that they want to be bringing to clients and to possibly be extending them beyond from what they've traditionally done. You know, McKinsey had a great stat about this. They said that in 2025, the globally distributed digital consumer economy would be about $60 trillion. And for retail banking, it would be about $4 trillion. So banks have to look at, do you want to be a big fish in a small pond, a small fish in a rather larger pond? And then if they are crossing into that line, the value propositions will extend beyond banking products into something else that will be more of an integrated, curated experience. Personalization, building out ecosystems, partnering with fintechs and companies even outside of financial services and creating new value is going to be key.
What particular technology trend do you think is going to be on the rise in 2019, and what can banks do about this?
I see two trends. First of all, we've seen a lot of activity with open APIs. To date, a lot of that has been driven by regulation, PSD2 in the EU, and then the open banking mandates in the UK, as well as other countries around the world. However, what we're also seeing now is that the leading edge within banking, the most innovative banks, are also starting to open up APIs into a broader ecosystem. I think that as banks contemplate their future and what they want to be in the future, they are also going to be building out open APIs, sharing information with third parties in order to create those new value propositions. And secondly, the other theme that I see is IoT. The Internet of Things. It's really interesting because you hear sporadic talk about it. There's occasional pilots that are going on, but I think that where we are right now with the Internet of Things is where we were, say, with blockchain 2 years ago, where there were some talks, some pilots, but blockchain is now getting into pure operationalization, and IoT, certainly on the commercial banking, supply chain, trade finance side of things, has huge opportunities to mitigate risk and also to reduce costs.
How can Software AG solutions help banks better capitalize on the changes that are happening in digital financial services, and what sort of products you have to help them with this?
Yeah, well, banks, of course, are I guess the sum of their parts, and a lot of those parts have been built by acquisition over the years. It's not being integrated. There have been siloed approach to management and governance, lack of documentation. So in order to be agile, in order to compete effectively with those digital-first competitors, it's absolutely key that banks look at not only their IT infrastructure, their enterprise architecture, and also their business processes. They have to go through and map and have transparency in IT architecture, because to be nimble, there has to be the confidence within the IT organization that changes that are made are not going to have undesired consequences down the line when, for instance, new products are launched. Similarly, banks spend tremendous amounts of money on just keeping the lights on, right? Maintenance. And if they are able to do some portfolio rationalization, they will be able to take some IT budget and move it from the maintenance side over to the innovation side. And similarly, if we look at the operations within banks, by creating what one CEO in the US said, a pane of glass onto the entire operations across all of the businesses of the banks, so that there is an ability to see from strategy to execution and to be measuring performance on a risk-weighted basis. That is how banks are going to basically grease the wheels in order to compete with those digital competitors and do everything else they have to do in a client-facing way.
Banks are obviously adopting a lot of technology, but which ones are winning and which are not doing so well? And from a software AG point of view, what are some case studies of banks that you've worked with to help solve some real-world problems for them?
Well, there's an awful lot of technologies out there that are relatively new to many participants in the market. Some of the technologies that we're seeing being used with tremendous effectiveness have to do with the comments that I just made about business and IT transformation. For instance, Credit Suisse is a large user of our IT portfolio management solution, and there's also a case study that happened in the United States, one of the top 5 banks there who wants to be anonymous, but I can say that their story is that they failed to meet the living will regulation, which was a huge problem because the regulators in the States would say, if you can't show us how you could survive by carving off a piece of your business in order to become solvent again, you will suffer consequences. They'd also had a manual process for a year trying to reduce the number of applications they had, and it actually increased from 4,000 to 4,300 during a point where the CIO was mandating a reduction in applications. So we worked with this bank, and we were able to provide them the tools and the capabilities to be able to examine this and document it and be transparent in order to become compliant with Dodd-Frank living will regulation, and also to begin a well-architected, disciplined approach to reducing applications. Similarly, we've worked with a couple of Asian banks that I would like to mention. First of all, a very large one of the largest in Asia, was having a problem about 10 years ago with fraud, looking especially at credit card fraud and ATM fraud. So we worked with them and developed a solution using streaming analytics to be able to survey all of the activity that any individual was undertaking. And by doing this, they were able to analyze and take the perishable insights of the moment and build rules after that in order to stop fraud, even before it happened. But the interesting thing about this is that those same perishable insights, when you have real-time client insight, can be also used on the revenue side. Because if you have an understanding truly of who your client is, and it's an insight across all channels, and you have the ability to act on those perishable insights, you can actually have real-time offers, for instance. So this is something that this bank has done to great success and is continuing to build out, really as an industry leader around the world.
Now, banks in Asia aren't forced with having to open up banking like they are in Europe or in the UK, yet many are experimenting with APIs. We have some that are doing nothing, some that are doing sandbox, and some that are really trying to get involved by investing in ancillary kind of payment landscape businesses. What do you think should be the right strategy and approach for banks looking at having to open up their ecosystem and their platforms in Asia in the absence of a regulatory imperative?
Well, I think it goes back to, the comments that I made about, what business does the bank want to be in? If banks don't build out those infrastructures, they do risk having their value diminished as the products that they've manufactured for years and years start to become commoditized. One choice, one business model would be to be the most efficient manufacturer, processor, and actually sort of serve as a service to other banks, and to be kind of like what a global custodian has been over the years, except to do that on the banking side. That's an option. However, open banking is coming as a feature of the convergence of industries, the blurring of industries, and the fact that it is expected by customers, whether they are retail or commercial customers, that they receive the same type of personalized, customized experience that suits their needs across a whole range of topics, as opposed to just getting a mortgage, for instance. I want a home buying experience, someone to hold my hand through that whole process and make me successful. That's really what open banking is. So it is possible, just be the processor in the back end. There's the bleeding end, the bleeding edge, the leading edge that is successfully doing that. And then there's the middle who are going to realize that they can't just slap some open APIs and do a little bit and do an experiment, but they actually have to take the plunge and really reconsider what the value is going to be.
Laura Crozier, thanks very much for your time today.
Thank you.